To me, there's a full spectrum. If you are an investor who is worried about buying stocks that are sin stocks, that do bad things. One option is just to index, because indexes don't proactively seek out investments that are kind of bad for the environment. Okay, then if you move to the left of the spectrum, well, possibly you could buy actively managed funds that possibly would buy nuclear, etc. Well, just exclude those entirely, or you can actively seek out investments that do proactively seek out those higher quality companies. So someone who is concerned about investing well for the environment doesn't mean they have to buy these SRI funds, buy an index that isn't proactively seeking investments that are bad for the environment.
And do you think that an investor who is investing in funds that they personally believe in, do you think it's going to make it easier for them, say if there's a market correction and they're not performing as well, to be able to stick with those funds over time?
I think so, because you've changed the commitment from some random fund from some company to a fund that I care about. They're doing good for the environment or for governance, etc. So I think it helps investors better appreciate how their investments are helping them accomplish their goal, but also how they're getting there.
And the research says that trust is very important when it comes to accepting risk. Mm-hmm. And if you trust the people who are investing your money, then you might be more willing to accept a greater amount of risk in your portfolio. Mm-hmm. And that might be better in the long run.
That's right.
So there may not be that performance trade-off.
Correct. Like helping clients understand, where they're taking risk, where they're taking risk, I think is really important. But there really are a lot of options today in terms of funds that allow you to have, all equity portfolios or all bond portfolios that really are good for the environment, good for SRI, et cetera.
Okay. Well, thank you very much, David.